So every year this thing arrives in the post. Unfortunately, it is not an envelope stuffed full of cash, it's actually the exact opposite. It's my annual mortgage statement, so I guess it's an envelope stuffed full of the list of cash that I owe the bank. Now in this statement it shows exactly how much of the house that I live in with my partner we still owe to the bank, which is quite a lot. In this video, I'm going to go into the detail, and on this channel, that's what I sort of do. I share my situation, my plans, honestly and transparently. So if you find that sort of thing interesting or insightful, please do hit that subscribe button down below. So this showed us that at the end of 2025, our outstanding mortgage balance was £123,817. And I know that to some people, that will sound like a huge number, and to some people, it will sound completely tiny. To me, it does feel quite large, and it does feel slightly intimidating, to be honest, especially when I look at things like the interest rate and the term remaining, but let's break it down. So our monthly payment is £614 and it's fixed at 1.74% until May 2027. I know we're never going to see interest rates that low ever again. I'm going to make the most of that while it's here. But we don't actually pay £614 a month. We pay a total of £800 a month because for the last year or so, we've been overpaying the mortgage by £186 per month to make that repayment £800. Now, if I'm honest, in previous years, I might not have even read past the first page of that statement. I might not have even opened the envelope, but now this is my project. Now, I saw a mortgage in the past as something that I just had to resign myself to, that's going to be there for the entirety of my life. You're going to be paying it forever. But over the last couple of years, and more recently when I started my compounding project, I started looking at the numbers a lot more closely, especially during 2025 when at age 34, I decided to really take control of my financial future, or try to, and begin on my own investing journey. And because of that, and I'm guessing you might be similar if you are watching this video and watch other similar finance videos on the internet, you might have seen the same as I, that on YouTube there's a huge amount of finance debate about whether you should overpay a mortgage or whether you should invest that money in the stock market instead. So my take in this video is not financial advice. I'm just sharing my own journey, what I've been doing and my thoughts around it, where I'm aiming to make sensible decisions over time, but I am very much learning as I go and just sharing it on this channel. So our house is probably worth around £220,000 and the mortgage balance, as said, is £123,817, which means we've got about £96,000 of equity in the property, or around 56%. The bank require us to pay £614 back per month, but we've been paying £800 back per month, which is an overpayment of £186 every single month. And the beauty about overpayments is that the overpayment goes straight towards the principal, so straight towards reducing the mortgage balance rather than being offset against some interest or other charges. The interesting thing around this is we actually started doing this at the same time that I began investing in the stock market. It was a bit of a change in my life, a change of thought process. So when I did it, it didn't really feel like a choice between investing and overpaying. It was just that overpaying felt like the most obvious wealth building move. I know it doesn't directly increase the amount of money in my bank account, and I'm not going to see the benefit for years and years to come, but my thought process was, by starting this and doing this, it would eventually mean that my mortgage would be zero, and it'd be zero a bit earlier than if I wasn't doing that. And the mortgage represents to me my biggest monthly expense, and if that expense disappears, that would therefore increase my disposable income, open up my options in life, potentially have more money in the bank, and just really fall in line with my goals in the investing world. But without knowing which one was the best thing for me, I just thought I'll do a bit of both. So as mentioned, the mortgage is on a fixed rate of 1.74%, and that's fixed until May 2027. When that deal ends, the interest rate will almost certainly be higher. At the minute, I've seen rates between 3.5% and 4%, so maybe it'll be more, who knows. So paying £800 a month now is partly about us just mentally and physically preparing ourselves for that. We've already built our lifestyle over the last year or so around that £800 a month payment. So when that new rate kicks in, hopefully it won't be much more than that, it shouldn't feel like a shock. It shouldn't feel like it's, oh, I need to change our lifestyle because of that. Now, when I started doing this overpayment, I actually thought that that would also build us a bit of a safety buffer in our repayments, in that during the fixed term period, if we overpaid and then say our income goes down or we have some life situation where we need to spend some more money, I'd be able to reduce my payment by that amount. But having looked into it in more detail, thanks to this statement and making this video, that is not the case. So that does change my thoughts about it a little bit, but it doesn't change my thoughts enough for me to stop making that overpayment. Now that is just a monthly subjective, feeling-based thing. So let's have a look at the proper numbers, because I know that is the important part as well. So what has that monthly overpayment done to the mortgage balance as at the end of 2025? And importantly, what will it do to the mortgage balance by May 2027, which is the refix date? So if we had stuck to the normal repayment and paid £614 back per month, the outstanding balance of the mortgage at the end of 2025 would have been about £126,000. But because we have been making that overpayment of £186 a month, the balance at the end of 2025 was actually £123,816, which is £2,232 lower, which represents the exact amount of overpayments that we've made. So that's come straight off the principal. And that is a big difference, but I think the bigger difference is when I extend the overpayment out to that refix date of May 2027. So from January 2025 to May 2027, that £186 monthly multiplied by 29 months adds up to £5,394 extra paid off the mortgage. So without those overpayments, the balance at that refix date would be around £119,000, so 119, but with the overpayments, it would be about £114,000, 114. Because as said, that overpayment amount comes straight off of the principal. So a lot of money, yes, but £5,000 lower is just essentially £5,000 lower. It doesn't massively change the overall balance of the mortgage percentage-wise, but to me it is a good step forward. Now, the common advice that I've seen on finance YouTube is consistently do not overpay a low interest mortgage. Instead, invest with that money. And mathematically, that argument might make sense. For example then, let's bring it to life. So if the market returns 7% per year, for example, and your mortgage costs 1.7%, investing should theoretically leave you with more money, even if your mortgage rate is higher, say 4%, where I expect mine to be. But real life decisions, for me at least, aren't just about numbers on spreadsheets. So just before I share my thoughts about it, let's run a simple example. Our overpayment is £186 per month. Over a year, that's £2,232 per month. Now, the FTSE All-World Index, just to use as an example, actually returned about 14% in 2025. But because that money would have been invested gradually throughout the year as the overpayments were made, the effective return was closer to about 7% on average if I'd have put it in the FTSE All-World Index. That would have turned that £2,232 into roughly £2,387. So that gain would have been about £156. And that's not nothing. I'm not saying that's an inconsequential amount of money, but equally it is not life-changing or mortgage paying off levels of money. So extending this out from January 2025 to the May 2027 refix date, assuming 7% returns in the market, that £5,394 turns into £5,898. And that includes the growth. So the second year does add more to this pot, a total growth of £464. Of course, this is theory. Meanwhile, on the mortgage side, so through making overpayments, reducing the balance by £2,231 saves interest every year, guaranteed, no questions asked. Now at 1.74%, that saves me about £38 per year, which will save me around £110 in interest by May 2027. But if the mortgage rate becomes 4% after the refix date, the interest saved becomes closer to £89 per year. And that saving continues every year for the rest of the mortgage, regardless of when you refix, as that balance will always be lower than it would have been if you hadn't made the overpayment. Also though, as would the compounding growth of the investment in the stock market. So mathematically, investing probably and almost certainly wins in terms of numbers, like mathematically over the long term, though of course long-term growth is not guaranteed, but I just think early on at least the difference is just not that dramatic. I know that £464 of growth versus £110 of interest saved might look like a no-brainer, like go for the growth and pay the difference off, but it's not guaranteed and there are many other factors at play which I'll cover now. There are a few things that spreadsheets can't cover or measure, and this is something that I've been talking about a lot on this channel, and I think it's really important, and that is stress. So one thing I personally value a lot myself is low financial stress. If my partner and I, one of us lost our job, or something unexpected happened, or an unexpected bill landed, having a smaller mortgage balance just feels a bit safer to me, and that peace of mind is hard to model in a spreadsheet or to put a value on it. It's also worth mentioning that the interest saved when you overpay on a mortgage is guaranteed. There's no question around that. It's a certainty, whereas stock market returns are not. So that's got to be worth something in itself. And the other thing is, I can't fully understand the feeling because I'm not in the situation, but I often see people commenting on this style of video online saying that they've paid their mortgage off and they absolutely love the feeling of it, or it's removed a big stress from their life. And that is a theory I have in my mind, that I will feel that way if and when it happens, but it is just a theory. I'm just putting my trust in it at the minute, that I'm valuing that feeling a lot, and I'm hoping that I'll feel the same if and when that was to happen. It's also worth mentioning that we probably won't stay in this house forever. We've been here for around 5 years now, and whilst we have no immediate plans to move, you never really know, do you? All I do know is that if we do move, the house that we move on to will very likely be a more expensive house. The places that we both like to live in future are more expensive areas to live. So even if we're not stepping up in terms of the size or number of bedrooms or size of garden, we absolutely would be stepping up in terms of value. So making this overpayment just increases the equity that we have, which just gives us more options later down the line. I see this now as a process, as like a stepping stone rather than like an end game theory. Like, I'm not planning to pay this mortgage off to the end. And realistically, sadly, the areas that we would like to live in are probably 2 to 3 times the price of this house we live in now. So it might be a long, long way off. And it's just so far out of reach that it's more of a pipe dream than even like a short to medium term plan. But taking small steps towards a dream still feels better than no progress at all. Somebody actually commented on one of my videos recently saying it was something like 1,000-mile walk starts with a couple of steps, and that stuck in my mind, so thank you. This is me taking my couple of steps. So the honest answer is, because I'm not a finance guru, is I'm not entirely sure what the perfect decision is. Mathematically, investing might and probably would win for investing over repaying, but financially and psychologically, reducing debt still feels like the right sort of thing for me to do right now. And that's what this channel is about, really, for me. I'm not pretending that there's a universal or perfect strategy that everybody should be following and you need to buy my course to find out what it is. I'm just documenting my real life financial decisions as they happen. I would be curious to know though, in this situation, would you overpay the mortgage or would you invest that money instead? And have you followed either of those strategies for long enough to draw a conclusion? I'd be really interested in hearing your thoughts. Thank you for watching.